Basta loan, global domain yan.
Basta loan, global domain yan.
Basta loan, global domain yun.
Please.
Perfect. All right. So we are reporting great evening to all of our audience here in the Global Dominion Financing Incorporated Facebook page. And as you know, we do this regular interview with our experts in terms of financial literacy and financial inclusion and all other financial stuff. And tonight we are honored to be joined with the country manager and the chief strategy officer of FinScore.ph and Cash Credit Mobile PH, Christo Georgiev. Christo, how are you doing?
I'm excellent. Thank you very much, Anne, for inviting me, and honored to be your guest.
Thank you, and thanks for spending time with us today. I know you have a lot of things to do right there, and we have considering the time differences as well. But have you ever been to the Philippines?
Oh yes, I've actually been living in the Philippines on and off for 6 out of the last 8 years. So I spent the majority of my professional and adult life, I would say, in the country. I like it very much. It's been my permanent home for the last 4 years. So I've spent quite a lot of time in Manila in particular.
Good to hear that. Good to hear. So I'm sure you're an expert, you're seasoned in the topic that we would like to open today for discussion. When we usually talk about financial stuff during our dialogues, it's rarely that we have someone who have expertise in both the Philippine market and an outside market. And I believe you practically have both, being experienced in the international market as well. But let's talk some of the basics first. Let's start with financial inclusion. What is it and why is it important?
Yeah, it's a great question. And I mean, obviously, the topic of financial inclusion becomes even more crucial in times of distress, such as during the current economical and crisis led by the COVID-19 pandemic. Broadly speaking, the way I'll give you my definition on financial inclusion is essentially ensuring that even the most vulnerable members of society have access to financial services. That's very much the baseline of it. From there on, of course, and this should not be just financial services on paper. These should be actually effective products built by the traditional or by the incumbent or by disruptive forces on the financial markets. Now, if you're going by the Bangko Sentral ng Pilipinas definition, of course, they also must be appropriately designed. They must be of good quality, and they must be responsive to the varied needs of individuals and businesses. And this includes savings, it includes payments, it includes lending, it includes investing, and it includes insurances. So all of these basically are very key parts of the financial inclusion, and it's been one of the hottest topics regionally in Southeast Asia, as well as in the Philippines, since forever, but definitely since I've been following and since I've been living in the country.
And that's a lot of product right there. You mentioned, so we have savings, investments, insurance, and all that stuff. How difficult or how easy, I do not know, was it for you in your time in the Philippines to work within the realm of financial inclusion and financial literacy? Was it difficult?
I would say both yes and no. I mean, generally working in the Philippines has always been a great pleasure for me. Some of the most dedicated and professional colleagues that I've had the joy to meet in my life are Filipinos, and it's clearly, if I had not enjoyed working in the country, I would not have made it my permanent base, so to say. So from that point of view, I think the Philippines is actually quite welcoming both for professionals, and has a business environment where it's not difficult to fit in. For example, my home country, Bulgaria, is probably a couple of degrees degrees colder when it comes to kind of integrating or absorbing businesses from different cultures. Within the financial inclusion, or within the finance industry in particular, and there is, of course, always various degrees of challenges when we go a couple of levels deeper. And they're typically related not so much to the country. I believe government framework is actually quite well developed in terms of rules and regulations. It's more about the underlying and available technologies, I would say, and also to a certain degree the attitude towards the fact that the world is changing, the economies are changing, financial institutions are changing, money is changing. And this has been where we have seen that a lot of education is needed on the market in order for us, and also for the recipients of our services, to be able to get the maximum out of it and to get the hang of it in the first place.
Yeah, and it's great that you mentioned a few things here. You've mentioned technology, you've mentioned the world itself is changing. You also mentioned government framework, and you mentioned your own country, Bulgaria. I'd like to know what differences did you see in the Philippines versus your own country, or maybe other countries in the world?
Yeah, absolutely. I've spent some time apart from Bulgaria, spent some time in several other developed countries in Western Europe. I've lived in the UK, I've lived in London, I've lived in Germany as well. So where Bulgaria used to be quite similar in terms of financial inclusion, I'm talking about, to the Philippines, maybe about 10 or 15 years ago, in the sense that about half of the population didn't have access to bank accounts, essentially, in the sense that the number of formal saving was relatively low. When it came to investments, basically everyone in the country only invested in real estate, pretty much, and that's it, nothing else. So I see a lot of those similarities between Bulgaria and the Philippines in general when it comes to financial services. Then if we compare it with a little bit more, I would say, matured markets, such as the one in the UK, typically the government infrastructure in a country like this is quite more developed, which enables also the additional participants in the financial industry to offer a greater level of service, basically, to their own customers. And I'm talking about things such as, for example, national credit registry, about different kind of basically income registries where the salaries of each employee are registered. I'm talking about centralized system where everyone's identity can be verified, and so on and so forth. So these are some of the differences that in the Philippines are still making it quite difficult, both for the incumbents as well as for new entrants to the market that would like to offer services.
So you're saying it's getting there, but it's not there yet.
It's not there yet.
It is not there.
Slowly and steadily, and even for the last couple of years that I've been involved in the industry, I have seen it improve, but there is still a lot more work to be done, I would say.
Personally, how long do you think it would take for the Philippines to get there, to finally, see a bigger penetration? Because right now we only have 35% formal accounts penetration in the past couple of years. Yep.
Yeah, absolutely. I wouldn't be in a position to make that forecast accurately, but in my view, there's the current economic crisis is going to speed up things. And we've already seen how digital payments have exploded since the beginning of it. We have also seen general greater adoption of technology, which comes with the imperative of having access to also better services provided by the government and by different kind of government institutions. So because I suppose to a certain degree, the new normal will be a make it or break it moment.
Correct.
This will speed up things over the next couple of years. So if my forecast at the beginning of the year would have been 10 years, now it's probably reduced at least to half.
Agree. I get that a lot. They say that the pandemic has shortened the transition from a decade to maybe just a few months. And just earlier today, a few weeks back, I was able to also discuss with another colleagues into the financial inclusion advocacy, and she was like, the banks are there, they're on their way to digitalize everything, from credit to onboarding, but there is still low, I wouldn't say low, but there's not that much response from the community yet. I mean, I haven't seen an abrupt increase in the number of accounts opened, or, us reaching out to the remote areas, remote communities. What do you think is a gap there?
I mean, yeah, that's a great point, and of course, sometimes the saying "when you build it, they will come" can be used in that context. But generally, I think the biggest, like on a fundamental level, really, the biggest problem is the lack of information.
Okay.
And that goes in two ways. It goes into the lack of information and education for the recipients of financial services, and basically better tailoring the products in a way that they can use it seamlessly. I think one of the fintechs in the Philippines is doing this particularly well. I think it's called Discartech, which offers, for example, services in Taglish, which is really, really cool.
They do, yeah.
Yeah, but generally, it's the first part is the information or the level of information among the recipients of the services, and the second one is the level of information about those recipients of financial services within the financial institutions. And I mean, if you look at all of the key figures, yes, you're right. The number of people with savings account is still low. The ratio between informal and formal credit transaction is still not where it should be. Generally, financing options for micro entrepreneurs and SMEs could be improved in the country. So all of these things are going to be unlocked with a greater flow of information.
And insurance penetration hasn't even scratched the surface yet.
Yeah, absolutely, absolutely agreed.
Okay, so you mentioned about the gaps, between people getting the correct information and the institution getting the right information about their customers. Let's start with the community getting information. So yeah, I'm painting that picture in my head. So now the banks can build an account for you in a snap. They could allow you to create an account and deposit a check with just photos. And you're saying people just don't know this yet. Many of the people in the community just do not know this is possible. Is that
absolutely?
Okay.
Absolutely. You've nailed it down. And there's definitely a level of level of education that is required for them to be able to use it, and also a level of building products with the user at the center, in order to make adoption as seamless as possible.
Okay, user as the center, because that's the second point. This is what we're looking now at the institutions knowing their customers very well. Correct. So the second point, we're looking at a picture wherein maybe the bank or financial institutions do not know their customers or their clients that well to be able to expand comfortably. Is that how it looks like?
Yeah, I mean, that's certainly a big portion of it. You put it down very well, in the sense that one of the biggest challenges generally for financial institutions is within the current framework, or within the current level of within the current available information from various both government and private institutions. It's very difficult for them to be able to onboard new clients, new borrowers, new users of their financial products at high speed, yet at a low, I would say, at a low future delinquency, or at a lower fraud rate. And a huge portion of this feeds into exactly the level of information that is available about the users of these financial institutions, and how much of it can be obtained in a digital format. For example, with 20 something types of different IDs, the Philippines, I think, is very very unique, and this has been historically one of the reasons why so many people have to visit a bank branch, for example, in order to open a bank account, which should be, as you mentioned, in a lot of the fintechs allow you to open a bank account within less than 5 minutes. Maybe you have to do an online verification, maybe they'll have to call you, but generally that should be a seamless process.
Exactly. And this is where FinScore come in, right? This is where FinScore comes in, because I read about a few things about it. So FinScore .ph, tell us about it. How does it actually help Filipinos in terms of financial literacy or financial inclusion in particular?
Yeah, it's a great question, and I mean, I guess one of the ways to explain it is through basically giving a practical example through the lens of someone who is credit invisible, essentially. So imagine Maria. She's a housewife. She's residing just outside of a CBD. One thing that she's very, very good is cooking ulam or other Filipino main dishes, like my favorite adobo or caldereta or pinakbet or something else.
Wow. Okay.
On weekdays, basically, she cooks up to 3 or more packed lunches. She sells it from office to office, just enough to basically cover for her kids' school allowances. It's a side hustle, if you want. It's very much the type of the type of thing that I have seen happen a lot in the country, and it's very, very good. This is where the entrepreneurial spirit is carried. Essentially, at some point, she realizes that if she opens a food stall, she would be able to accommodate more people, because there is demand for her dishes, because her cooking is very lovely. And this opportunity could boost her business more, and it could also give her higher availability to earn higher income. So she has the skills and the passion, she has the market. All she needs is basically starting capital to afford the rent, to afford the ingredients, and to afford the equipment, right? So at that point, she's exactly like the remaining around 70% of the population that doesn't have access to banking services and doesn't have access to credit. So ultimately, if she doesn't have any assets that she can use as collateral, essentially she either has to obtain informal credit, essentially, or maybe that in certain cases that also might not be an option. If, for example, she cannot ask her friends or family, it also may not be an option. So for her, basically, to get a loan from a traditional financial institution might be quite difficult. And this is where FinScore comes in the sense that Maria does have another asset that might be actually quite valuable. And this is her mobile phone, and in particular, her activity with the telcos. So her
mobile phone.
Basically,
right. How does that work?
Yeah. So how does that work is the second great question.
Okay.
Basically, what FinScore does and what is possible to be done based on this is essentially if you have had, or if Maria has had a mobile number for a long time with one of the telcos in the country, let's say with Smart, she's already has history and behavior and reputation on the network of the mobile operator that can be used as a predictive factor for a financial institution for her creditworthiness and for her general behavior as a borrower. Now, what sort of information can that be? For example, how long had Maria had her SIM card for? How long does she use it for? What sort of, does she make a lot of calls? Does she use a lot of data? How often or how frequently she tops up? What sort of amounts? All of these factors in combination paint a picture, a sort of an extended identity of Maria that she can rely on and that she can transfer and that she can demonstrate to financial institutions whenever she applies for a loan, and when this financial institution does not know anything else about her apart from essentially what her name is and any other self-reported information.
So we're looking at information from the telecommunications company that Maria has.
That's correct.
Okay. All right.
That's correct. And if you,
how does that help? How does it help the financial institution? Let's say I have your records of how long you've been with a telecommunications company. I have your records of how many calls you make in a day. How does that help the financial institution?
Yeah, this is exactly where FinScore makes its distinction. Basically, we build a credit score, a behavior score, essentially, that combines all of this information and feeds it into the form of one single digit for the financial institution to include into their credit decisioning models. And as such, for example, this additional information in the form of a credit score basically can make the difference between Maria getting a loan or not getting a loan at the very high level. And how it helps financial institutions is in two manners. Basically, it increases their approval rate because now thanks to the additional information, they can approve more or they can serve customers that they previously didn't have enough information to basically serve profitably. Or on the other side, it also reduces the risk level thanks to the additional level of information, with which basically the overall default rates of the financial institution would go lower. Depending on who you talk to, for example, for a bank, it's more important to increase the approval rate. For a digital lender, let's say for a payday lender, it's more important to reduce the default rate.
Right. Yeah, you're right that it's more important for bank to increase the approval rate because they have that much money. They
Absolutely.
I was just talking to a few colleagues about it a few hours ago, and then there has to be a way to make them more comfortable or feel secured in lending the money out, because the money's there. And there seems to be a difficulty in identifying who they can lend more to. And on the other hand, it is helpful for Maria, your example earlier, because she doesn't have anything else.
Yeah.
Does this also help those who are already banked in improving their identity or whatever, their footprint with the banks, maybe?
Yeah, absolutely. I mean, when we talk about credit invisible, of course, this is the more extreme scenario. There's also a lot of, or these are the so-called unbanked. There's also the people who are underserved by the traditional financial industry, which are essentially bank account holders who've never taken advantage of a credit product in the past. And that's typically more risky to a financial institution than serving someone who has past financial history. It's not being stellar, but at least they know their behavior when they're given a loan product. We list for essentially for individuals who never had a loan in the past. They are a little bit more unpredictable, and this is where FinScore can help also for individuals who already have a bank account and just never availed a product from a financial institution in the past.
Wow, interesting. So it seems like it's really helpful. I'm just curious how the algorithm work. Like, I'm sure it's proprietary, but we have information as to how many times you've made a call, where do you call? I mean, how do these things matter? How do you score these things? Just share what you
absolutely.
can.
So all of the information is being basically presented. Absolutely. The first important thing to keep in mind is that all of the information is in aggregated and anonymized form. So basically, there's no concerns whatsoever with privacy. There's none of the content or anything like that feeds. FinScore doesn't have access to it. It's not part of the algorithms. It's basically things such as, for example, how often do you top up your prepaid card? This is important. Or what sort of the average amount of the top up is, or how long you've had your SIM card for, or how many calls you do average versus the rest of the smart subscriber population, and so on and so forth. All of these are hundreds and hundreds of, I would say, metadata really that is available for subscribers that already sits. It is available just in an ecosystem that is typically not available to the financial institutions prior to FinScore as a company coming into the picture. And how the algorithm works is a very complex topic in a way, in the sense that our data science team has built different algorithms based on both machine learning and neural networks, who essentially take all of this available data for a subscriber. They do multiple iterations and combinations. They compare it with a pre-existing target, basically, which is the likelihood of the borrower being of the applicant really being as similar to previous borrowers who are good or previous borrowers who are bad. So from that sense, essentially it compares it with, most of the time, with existing information about other applicants, and based on this it says, okay, let's say this is someone that has their SIM card for under 5 days or less than a week. They've not topped up. They have only called one number or only texted one number. That's probably more coherent or more similar to the profile of someone who would potentially not be entirely reliable for a loan. Versus the other use case, which is, okay, this is someone who's had their SIM card for a long time. Obviously, because in the Philippines, you know, SIM cards are not required to be registered. And there's no personal information that's required to be registered when you purchase a SIM card.
And there are more SIM cards than our population.
and there are more SIM cards than there's people in the country. Absolutely. Right. So from that point of view, ultimately, it means that the cost of disposing a SIM card is trivial, simply because it's just the cost of buying a new SIM card. So if someone has had their SIM card for a long time, has made regular top-ups, he has an active number of contacts that he's interacting with, this is the profile of someone that generally would have a higher score. But there's numerous factors that feed into it, and I won't bore your audience with it. Yeah,
for sure. It sounds complex, but but I think one of your goal is to make it easy or simple for the financial institution and the people. I'm just curious though about those with the bad records. Was there ever an instance wherein someone who has really a bad record but used FinScore in identifying whether a credit would be okay for this particular profile, and that it was successful. That the score you produced was reliant.
Yeah, absolutely. I mean, what's important to keep in mind is that always the financial institutions, such as Global Dominion, for example, is always ultimately the company that makes the decision on whether the client should be given a loan or not, because the information from the telco is just an additional dimension that gets incorporated into the credit decisioning process. And because of that, sometimes, and most of the time, what we see is that actually borrowers who are not going to be approved for a loan get approved for a loan because of that extra dimension. Sometimes the opposite may happen. It depends very much on the level of information available to the financial institutions.
Well, how are your transactions with your partners right now in the Philippines?
There's actually, there's been, of course, I mean, such as with any business activity in the country, we've seen a slight drop in the first months of, especially around the lockdown, but it's picked up since then, and demand is ever growing because our service is available in a digital form. It's available through an API, also through a portal. We've so far disbursed, I think, a little bit under 4 million telco credit scores in the country over the past 2 years. So ultimately, the availability and the fact that it's real time makes it very, very, very important for any digital onboarding process, really, or for any digital process where credit decision needs to be done primarily by relying on digital sources. There's a couple of other quite important things to remember in the sense of why is it interesting for financial institutions, especially in the context of a crisis like right now. The first one is basically getting information out of your potential borrowers or potential users of your financial product is not super easy. And you want to rely on the minimal possible information, because otherwise a lot of people just don't ever finish the user journey, don't ever finish the process with you. Our credit score relies only on a mobile number, and it can be postpaid, it can be prepaid. We can return a credit score based on the telco data for it, which is essentially this minimal requirement for information is a very good reason for it, I would say. It works on both feature phones and smartphones. So ultimately, we know still that, I don't know, based on my reports, maybe you'd have additional intel, still around 30% of the population of the country uses a feature phone, which means that there's no way to get any further information out of their device, but they could still be their telco credit score can, if they had good reputation with the network, can still be used for a purpose of receiving a loan. In addition to it, it works nationwide. So basically, as long as there's signal, I would say, within the mobile network. Individuals can be scored, and it's at the end of the day, it works in the best possible format for both the borrowers, because basically they can allow additional information about them to be shared with the financial institutions, and for the financial institutions because they get a sort of a tamper-proof, a reliable record about the behavior of their loan applicant in a different ecosystem.
You could easily understand how important or what positive effects it actually has to both the lender and the borrowers. Would you be able to share any success stories? For instance, where you helped a specific financial institution or FinScore was used by an organization and their approval rate has increased. I mean, without mentioning the brand.
Yeah, absolutely. Yeah. I wouldn't be allowed to do so.
Yeah.
But we've conducted, I think now a little bit under 30 different proof of concepts with financial institutions in the Philippines. For each of them, essentially, we demonstrate the service in the sense of what it would have been if you had this information at the point of loan application for your existing portfolio. And typically, the results are that they would have been able to, if we receive information also from the financial institutions about the customers that they rejected, typically what we are able to show is that they would have been able to approve a higher percentage of their people that they rejected. And one particular consumer lender company was able to essentially increase their approval rate with more than 12% because of that, which in terms of if applied to a whole portfolio in a scaled manner, it's a very big portion of extra business.
You almost mentioned the amount.
I almost
there.
Yeah,
12%. That is huge. All right, I'm gonna look this up. Okay, so how will businesses or interested financial institutions, how can they reach out to finscore.ph?
Yeah, well, I think you've said it a couple of times, which is very much appreciated. Currently, the easiest way is to go through our website, check out our products, read some of our use cases, and basically send us, contact us through the contact form. We also have quite active social media channels. I believe this is how we were able to get introduced as well. Right. We are active on LinkedIn, on Facebook, on basically all the digital channels that currently that are currently the only real possible way to interact with your audience, really. So we're quite responsive in any of those. It's possible to be reached.
So if anyone hasn't been able to hear what I said, like what the website is, I'm going to show it also right here below.
Excellent.
I'm also going to put that down. All right. Well, I don't have any other questions for you, Christo. It's been a wonderful dialogue. I've learned a lot, especially about FinScore. Is there anything you'd like to add or share to our audience?
No, thank you very much also for inviting me. It's been a great pleasure. And I'm looking forward to your colleagues from GDFI reaching out again to FinScore, so we can do the best for your institution as well.
We'll nudge them.
Excellent. Appreciate it very much.
Thank you again.
Take care and speak soon.
Mabuhay.
Bye-bye.
Bye for now.
Bye-bye.
Stallone, Global Domain.
Stallone, Global Dominion.